Okay, thank you very much, everybody, for attending this webinar, which marks the launch of our Bahrain Property Market Report. Today, Hashim and I are going to give you a brief overview of the main themes contained within that report, and you will receive a copy hopefully later today, which will be the actual detailed report in circulation. So we'll do the presentation, and we're very happy to take Q&A at the end. I'll just turn my camera off for now. So just very briefly on Savills, we have 600 offices worldwide in 70 countries, 43 years in the Middle East, and we have 39,000 employees globally. We're market leader in the region with 7 offices in 5 countries. And what we try and achieve is a local presence, but with global expertise, so that we can offer our clients bespoke advice. So just on the GDP trend, I think it's now suggested that the global economy could now shrink by 5% in 2020. And just to put that into perspective, in 2009, during the financial crisis then, the GDP fall was just 1.1%. And as we know, there's various opinions on how the shape of the recovery is going to be. We've seen V's, we've heard about V's and L's. And I think now in the UK, we're looking at potentially a double dip W recovery. But still, we don't know how it's going to end, unfortunately, whether we're going to slowly exit, whether we're going to vaccinate the virus, and that's all to be seen. But what is certain is that the containment measures have, without doubt, dealt a real blow to a number of industries, including obviously the oil industry, the aviation industry, and the hospitality industry. And many of the themes that we saw emerging pre-COVID still resonate, but what's happened is they've just accelerated literally overnight. What would have been nice is for it to have been a sort of gradual evolution, a sort of decade-long shift, as opposed to this slam that we've seen overnight, what we're witnessing now. And it does pose big questions, big challenges for the real estate sector to cope with. However, many of these are actually quite good. They're good for individuals, good for the environment, and I'm just going to go through a couple of the main themes. Obviously, we've seen a lot of home working going in, and this is great in terms of time with families and less lengthy commute times. I think this is less relevant when we're talking about the Bahrain market. I think if you can reduce your commute times in London, for instance, going into London, that's obviously a big change in people's lifestyles and a beneficial change. I think it's less relevant here because of the commute times being shorter. Does it mark the death of the office? Our view is that's unlikely. I think we still want to be able to collaborate in person. It's very difficult to motivate via modem. I don't think that's going to continue or sustainable. But I think what we'll move into is probably more of a hybrid scenario where there's more flexibility. Certainly in the UK, we talk about London, I think there might be a move to more of a hub and spoke type setup where you have the head office in London, but a smaller footprint. And then further out in the regions where people are living and working from home, etc., there may be some more sort of temporary offices that people can use, but we'll see how that evolves. Another one is in terms of the shopping, online shopping, and we've seen obviously proliferation on that side of things. It's obviously more convenient for shoppers, which is a good thing, but it's less good for malls that rely on footfall. Again, I think it's probably less relevant for the Middle East and Bahrain, because I think malls will always play a very big part in life of people in the Middle East. But we can't take that for granted. Malls still need to look at ways of creating more experiential and leisure opportunities. They need to adapt the offer, and I think we're seeing that happening more and more. Then when it comes to business travel, I mean, I'm for one incredibly happy that I'm not on a plane weekly going to visit Cairo, etc., on a regular basis. It's great to be able to use Zoom and Teams, as we're all using now, and clearly it's better for the environment in terms of the flights that are involved. But again, it's less good for the business hotel sector, and I think that whole sector needs to look at ways it needs to adapt as well. And then when we're talking about sustainable tourism, I think that's a move that we're going to see more and more of. I think there will be a reduction in mass tourism that we've seen in the past, and it will take a while to recover. I don't think it's dead, but I think it will take a while to recover. But it's obviously less good when we're talking about the hospitality industry, and I think they will have to look more and more at servicing the domestic market going forward. So just a quick comment about Bahrain and the way Bahrain has dealt with the COVID scenario. I think on the whole, they've dealt with it incredibly well. A very generous stimulus package was put in place, and supporting Bahraini salaries. I can say from experience that certainly helped our business. And I think it no doubt will boost the credentials of Bahrain as a business-friendly place. And I think that looking back at this and comparing it to how maybe other GCC countries have responded, I think it will be remembered how Bahrain managed to assist and support businesses. But obviously this spending has come at a big cost to the economy. I think 30%, I think latest figures I heard were 30% of GDP has been spent in tackling this virus and the economic stimulus. So it has put significant pressure on the government, and I think pushed public debt much higher, and Hashim will go into a bit more of that in the further slides. But one thing, I've actually stolen this from Economic Development Board's their website, but I think it's a really good set of graphs, because it shows that doing business in Bahrain is 40% less than Qatar and Dubai, looking at those measures. And I think that gives Bahrain a really good competitive advantage. And I think it's something that Bahrain needs to really shout about. As businesses look to reduce their cost base as a result of COVID, I think Bahrain has a really enticing offer. So I'm just going to pass you over now to my colleague, Hashim, who will go into a bit more depth.
Thank you, Harry. So as Harry mentioned, this webinar coincides with the release of our Bahrain Property Report. So over the last year, we've been collating indices on the resi and commercial markets, and soon retail markets. So if we just go on to the next slide, Harry. So this is the first shot of year-on-year results for capital values and rental values for both apartments and villas in the resi market. They've both come down, as you can see, in tandem, and that's largely linked to the investors who buy and then place them on the rental market. COVID did obviously have an impact on rental values, and I'll touch on that in the next slide. So there's a very large supply pipeline. There's something like 7,000 resi units due to come online in the next 5 years. And because of that supply, it's had a knock-on effect to residential rents already. So COVID had that impact, plus the supply, it's being exacerbated. And like I said, and you saw from the capital value index, typically where you'd have investors coming and buying a whole floor of apartments and placing them on the rental market and getting a yield of 8 to 10%, no longer really exists. And so developers are having to be much more, they're having to incentivize buyers much more, offering things like furniture packs, service charge, I've seen paid for 10 years, etc. And a point I picked up recently, so rents in Villamar, which I think has been rebranded as Harbour Heights now, a brand new 2-bed, 500 BD a month inclusive, which is a very, very slight increase on an apartment which is 10 years old in Abrajululu, which kind of highlights the lack of growth there. And then the last point there, RERA. So we've all seen that in the last month or so, they've suspended a license of a developer, and it really shows that they're active now, and it's giving the market the level that it needs, and it's bringing it up to global markets, and that will in turn have an effect from outward investment, certainly. And then just moving on to the next slide, Harry. So as Harry mentioned, at the end of last year, we were very positive because the business-friendly message that was coming out from the EDB, who did an excellent job and still are, we were really looking forward to hitting this year out of the park because of those fantastic comparisons, 40%, huge savings for companies coming here to set up. Grade A offices have performed resiliently over the last year, and you can see from the index in the bottom that hasn't applied to the whole market. Grade B, Grade C have had a depression on the rents, whereas capital values have stayed fairly static, and that's largely due to them being owner-occupied and not placed directly into the rental market. However, that is likely to come down as resi rents get even cheaper, so the trade-off of buying v renting becomes even more stark. There has been a supply-demand imbalance for a number of years, I think everybody can appreciate, but there still is that demand for internationally managed Grade A stock, and that's where we'll see the focus. Harry mentioned the last point, does working from home mean the end to the traditional office? We're constantly discussing this, and as Harry said, it's likely to be a hybrid. I think people have seen the success. We, for example, are working across 2-3 offices. Does it make sense for us now to fly to Jeddah, for example, for a 2-hour meeting when we can do it in Teams? And then just moving on to the retail market, vacancy rates were increasing over the last year, and now that's been blown up even more because of COVID, with a number of retailers falling away, and unfortunately more are likely to do so. And that's not isolated to here. In the UK, between January and June this year, 11,000 retail units closed, which is huge. Consequently, that's had a knock on rental rates. And benchmarking of rental rates is probably going to have to be realigned, and there'll be a correction because the rental rates of 2019 are unlikely to be sustainable in some instances going forward. In Saudi, we've seen rental models changing, so landlords being a bit more flexible and turning to turnover rents. So it's directly linked in with the performance of the retailer. And again, unseen incentives are being offered. We've seen 9 months, 12 months rent-free periods being offered in Grade A retail space, which shows that landlords are really having to think of innovative ways to keep hold of tenants. The last point there, rise of omni-channel and internet retail platforms. We were tracking this obviously for a number of years because of the other mature markets that we work in. And the 2 headlines in the bottom there, which I put in. So Amazon have repurposed a warehouse repurposed a shopping mall, in Ohio to become an Amazon warehouse. But then on the other side of the table, Amazon are now going into hard bricks and mortar stores. So it's not retail is dead, everything's going online. The biggest retailer, or one of the biggest retailers in the world, are even trying to find that balance, and that's going to happen here too. Moving on to the next slide, a lot of expansion plans have been put on hold. That was true up until about last week. I heard one retailer is now looking again at options to expand and looking throughout the region, but largely I'd say expansion plans will be on hold for the foreseeable future. Again, as the tenant pool is reducing, as tenants fail to reopen, letting periods are likely to be extended. Like I said, landlords are having to give new incentives to try and attract these tenants, but with a smaller pool size, it's becoming a very, very competitive market. We're not seeing footfall. We don't believe footfall is going to return until mid next year in terms of pre-COVID levels, and that includes Saudis, for example, coming over the causeway. The cost of the COVID testing makes it a bit unsustainable to come for a weekend at the moment. Consumer behavior was already changing, and that's likely to be blown up even more now because of COVID. Like I said, people are going online. People prefer to pull up outside a retail unit, hop in, hop back out, rather than park in a mall to go to a bank. And so those behaviors are likely to continue. Two pictures there at the bottom. So this is a mall in New Jersey that was delayed for a number of years because they were trying to catch up with the changes and the impact that was the retail market was having. And so they've pulled in DreamWorks Water Park and Nickelodeon in the shopping mall to really give that experiential theme through the mall. And I think that is going to be key here. I don't think a cookie cutter approach to malls that have the same tenants is going to work, and developers are really going to have to think what makes me stand out compared to my neighbors across the road. And I know a lot of this has been quite negative, but one positive we can take from this is that the industrial sector is likely to have a knock-on effect in terms of demand, because if we're switching to more online, we're going to need fulfillment centers, we're going to need more logistics and supply chain support, and so that's the sector that we'll definitely be watching more closely over the near future. And just concluding, and so we've seen an increased number of expats leaving. I think even in Oman the other day, it was something like 5 or 15% of expats left, which is huge. Does that have a knock-on effect to high-end residential? It's quite likely, because those expats are the ones that usually take those up on rental basis. The impact of the closure of the causeway, so there's a number of impacts here. There is obviously retail on the weekend, but there are also people that work in the Eastern Province and live in Bahrain. They weren't able to go across, and so they had to be situated there. Does that mean that employers like Aramco will now stipulate that employees need to be permanently based in Saudi? We've certainly heard rumours that is going to be the case. So will that have a knock-on effect to the resi market in Hamala, Sar, Janabia, etc.? Working from home is on the rise and likely to continue in some form or the other. We will see people looking for home offices or extra space, more focus on leisure spaces because they're going to be home more. That has an impact on utility costs because obviously they're home all day. So will they then maybe looking for smaller places, smaller apartments or villas? We expect a slowdown to occur across the board for the foreseeable future. And like I've mentioned a few times, developers and landlords are really going to have to offer incentives to attract both buyers and tenants alike. Harry mentioned the economic impact. Sorry, next slide, Harry. The economic impact that the stimulus packages have had, not only on this economy, but economies around the world. Like Harry mentioned, the UK is probably going to go into a double-dip recession quite soon, and there's no doubt that the effects of this are going to last for a number of years, and we can't escape that. And so the retail market, the real estate market, will have to really wake up and fall in line with that. Living and working patterns are changing. I won't touch on that again. The supply pipeline is huge, 7,000 units. We've seen resi developments here that have remained not fully occupied for a while now, and that's likely to be worsened. RERA bringing that transparency and raising the market is fantastic. We've needed it for a long time. Investment from outside becomes more attractive now because they can see that the market's regulated. There's a go-to authority, and like I say, it really provides the market with that transparency. Grade A offices have remained resilient. We think that will continue because, like I said, there will always be that demand from international occupiers and tenants that need that level of space. And the rise in omni-channel and online retail platforms is undoubtedly one of the biggest shocks to real estate, probably over the last decade. And we're by no means at the level of market penetration in that respect. And so that will likely to be one of the biggest impacts here over the near future. So that concludes our presentation. We've actually got a few questions in already. Just turn on my camera. So first question in is this a good time for malls to think of downward integration, considering cost saving in terms of own facility management? Harry, do you want to take that one?
Yeah, I mean, I think part of the service that the sort of, I suppose, we provide is very much about keeping costs down, and I think it's probably and it's a time when you have to really be actively managing assets. So I would say probably not a time to start trying to take services like that in-house. So I think that's something where, you know, international companies, real estate companies can really add value to developments at this time.
Would you say that that those landlords kind of need to focus on their core businesses right now?
Yeah, absolutely. I think that's key. I mean, you know, the services that, you know, we provide as surveyors is very much focused on those particular aspects. And yeah, I think you're right, Hashim. I think that you know, those owners, yeah, do need to probably, you know, focus more on the core business. Agreed.
Yeah. Another question in is, what do you predict will be the greatest changes in lifestyle in the region post-COVID? Swapnil, would you like to take that?
Yeah, thanks for that, Hashim. Good morning, everyone. So I think you kind of touched upon it briefly during your presentation as well, that there's clearly a shift towards a slightly more spacious living arrangement. And interestingly, we did a survey in the month of May and June, and as part of the responses, we kind of understood that close to 47% of the respondents actually wanted to move out of their current living arrangement, and they would want to move into a slightly bigger and spacious development that provides either you know, a small home office or has a slightly better communal garden facilities, and or maybe even just upgrading it because of the affordability that is there in the market. But like you said, because upgrading your living space will also kind of come at a cost in terms of the utility bills and everything, I think people will just play a bit of a wait and watch approach till they understand where the economy is headed and how their long-term and short-term financial standings are. And once that is and once they have a bit more clarity on that, I think we will see a shift towards a slightly more spacious living arrangement across the region. We have in fact started seeing that here in Dubai itself. A lot of our agents are responding that some of their clients have moved from their apartment developments and are taking up spaces in either a 2 or a 3-bed townhouse or a villa development.
Yeah. That leads me perfectly into our next question. One of the traditional benefits for expats was that a draw to Bahrain was the lifestyle and being able to afford to live in a large villa. But now with utility costs on the rise and some expats are paying 9 times more for their utilities, is that sustainable? Is that sustainable to attract expats? Harry, what's your take on that?
Yeah, I mean, I've seen a number of examples where there's been compounds where the tenants are responsible for paying their utility bills, not all inclusive, and it really has made a huge impact on the ability to be able to afford those properties. And I think, as you say, that's one of the reasons that a lot of people have decided to maybe downsize, to try and cut down the amount of utilities they're spending on a monthly bill. I don't know what the solution to that is, because I think, how can the government continue to subsidize the cost of that energy? And I think, until the government gets into a bit of a stronger position, I think that's going to be a problem and here to stay. But if you can think about some of the very large villas being rented at the moment, you can understand how much it costs to keep them cool, etc. So I think it's just a question of trying to limit, and be sensitive to, keeping the AC usage down to a minimum and just dealing with it in that way, for the time being.
Yeah, I guess it could go hand in hand with PropTech and smarter homes. So it could be a real opportunity for developers to now look at that and see how can we make it more sustainable type of living.
Just in terms of the construction and the way in which properties are insulated and stuff, there's a lot of movements in that area and advancements in that area. So I think a lot of it has to come down to the developers and the materials that are being used and how the properties are being insulated. And I know, looking across Europe, there's more and more regulation when it comes to EPC ratings, etc., and keeping that down to a minimum.
So I think you had a point.
Yeah, I just want to add that the property prices and the rents in the region are coming down. I think fairly across the board. So I think it's also a matter of maintaining that balance wherein at one end your rents are coming down. So does it make it more lucrative for me to kind of move into a slightly bigger apartment and bear that additional utility cost? So it's also about achieving that right balance. So I think that's gonna also help a lot of people to kind of take that decision to move into a slightly bigger apartment or a bigger unit.
Yeah. Another question: online shopping is destined to keep growing until it dominates. How will this ultimately affect the local retail sector? Harry, I think you touched on that.
Look, I think online shopping is here to stay. As I said, it's sped up dramatically. It would have been nicer for a bit of a slower adoption of it, but it's happened overnight. And in malls that rely on footfall do need to think about a new offer and attracting customers in. Again, I'm sorry to go over the old ground again, but it's all about that experiential. It's about the leisure that's being offered, and to try and attract people so they don't just sit at home and click and pay and deliver. So yeah, I think that's the crux of it. It's trying to create a really unique offer. I think that's how malls need to think and retailers need to think. What is quite interesting, just on the retail side of things, is we've seen a bit of a renaissance when it comes to more local community type retail. And I think part of that is the fact that more people are working from home and they're shopping. They still want to go out and shop, and they want to shop where they live. So I think we're seeing more and more of that.
Yeah. And regionally, Swapnil, is that something that you're seeing there in Dubai and our other markets?
I think like Harry mentioned, there is a real need to kind of integrate the online and the offline model. So we know that here in Abu Dhabi, there's a Reem mall that is coming up, and they are investing heavily into their back-end IT operations, wherein you can click something online, then you can go to the store and pick it up, or you can see something in the store, and then they will make sure that it is delivered to your doorstep. So I think it's all about innovating and making sure that you have that value add in terms of your offering, rather than just having a standard brick and mortar operation. That's going to probably help retail in the long run. But having said that, we are seeing a lot more brands entering the market. We are seeing a lot more global brands looking at coming into the market as well, and some of them who are there in the region are planning to expand. Like Watsons is a very good example. They entered the market somewhere in the month of March or April, and they have plans to expand around the region. They plan to open up around 100 stores in the region in the next 2 to 3 years. So I think there is still a lot of retail supply coming into the market from a real estate perspective, and a lot of brands entering as well. It is all about having a right balance between the online and the offline model.
I think similar to the working from home office market, where we're seeing a bit of a hybrid that it's not going to be solely working from home, and it's not going to be solely online shopping. It's because of the dynamics of the region. It's more of a hybrid.
Yeah, exactly. And retail has clearly moved from just being a shopping destination to more of an experiential destination. So you have a lot more family entertainment concepts. Like you mentioned about Nickelodeon or other brands coming in. So it's not just a place where you just go to buy your stuff. Like Harry mentioned, you could probably do that at a store very close to you. So if you're going to a mall, you want to have that experience. You want to spend a quality time with your family and friends there. And I think that will still continue to drive the retail developments in the region.
Yeah, and like I said, Amazon, who are one of the biggest retailers, they're still looking at physical stores, and so there's no big telltale sign. There's no bigger telltale sign than that, really.
Yeah, at the end of the day, we are all social animals, so we want that social experience. So I think retail is definitely here to stay.
Thank you. Just a few more questions. Do you expect developers of residential properties to continue to provide incentives such as furniture packs, or would they drop their prices to bring back yields to 8% level?
Just on the residential side?
Yes.
Yeah, look, as we know, as I'm sure everyone aware on this call, there is a huge amount of residential stock in the pipeline. I think last count was around 4,000 units over the next 4 years or so. So I think developers need to be very, very clever about the incentives they're offering purchasers. So and then also on the rental side as well, I think flexibility is absolutely key when you're in a bit of a down market. I mean, this is a general point. We have a slight supply issue, and now we've been hit with a demand shock as well. So I think now it's more important than ever that developers are really on the front foot and thinking of ways in which they can incentivize buyers, and landlords way in which they can incentivize tenants. Absolutely key.
Yeah, absolutely. A question here: what elements are necessary to finally repurpose redundant property stock across all sectors? Can RERA do more with urban planning to ease this situation? Swapnil, regionally, what's the trend you've been seeing in terms of repurposing? Yeah,
I think in the last 6 to 8 months, definitely we have seen an uptick in inquiry levels from clients coming to us and asking us, this is the office development that we had, but what needs to be done to make sure that it is kind of meeting the requirements of the clients as of now. Because to be honest, in the last 8 to 9 months, the client requirements have also changed. when it comes to office spaces. When it comes to residential, also the end user demand has changed. So just creating your standard product is no longer, like Harry mentioned, is no longer going to work. So what is the value add that I can bring into the table? So it could be subtle things like having a slightly larger balcony when it comes to residential, or making sure that your office building is properly ventilated, or has a slightly more larger flow plate, etc. So I think it's all about looking into all those factors to make sure that you're adding that extra value to your service offering.
Yeah.
So we are definitely seeing a lot more demand and inquiry levels from clients to understand what more needs to be done from their property.
I think that's the key. The question was, what are the elements that are necessary to finally repurpose? I think the key is that owners really need to accept that maybe this shopping mall or this resi building does need to be repurposed. When that acceptance happens, then it will flow through. But I think we've seen hesitation in some regards, that we try and cling on, and we'll get back to those good old days of when this mall or resi building was fully occupied. But that may not be the case, and it does need to be repurposed. And yeah, RERA working more closely with urban planning, I mean, there will be no negative from that. So yeah, it makes sense. Just a couple more. As the Bahrain market depends largely on expats, what do you think about upcoming projects like Babco expansion, King Abdullah Medical City, the new exhibition centre, and how would it affect the local market?
Yeah, I'll pick that one up, Hash. I mean, look, anywhere where there's job creation is a positive. So, we hope that, and aluminium expansion, sixth line there, etc. Anything like that where Bahrain continues to diversify its economy is a good thing. So that will always have a knock-on effect. I think, some of the newer build residential will attract that sort of tenant base. Some of the older properties are becoming a bit obsolete, and what we might see is sort of a migration from the older style residential properties to the newer buildings coming up around us, for example, in the Seaf area. So yeah, that's the main point. We need to create jobs, and I know that the government's doing everything they can to do that and continue to diversify one of the most diverse economies in the region.
Yeah, absolutely. Another question about regulation and in terms of licensing, and how does that affect the asset classes? RERA has obviously been active for a number of years now in Dubai. How do you see it affecting the market there, Swapna?
I think it definitely brings in a lot more investor confidence into the market, and it also helps regulate the quality of the development to a lot of extent, and make sure that the project is kind of delivered in the time that the developer has initially agreed. So I think from an overall perspective, it is definitely a welcome move, and I think it should go a long way in helping the property market in Bahrain as well.
Yeah, absolutely. We will have vacant offices in our commercial building soon, and we're looking for information that could help us define our target market. Do you think that companies are now more likely to go for smaller offices? I'll take this initially. So yeah, like we said, I think there's going to be a hybrid of working from home and the offices. But in the office, do we think the office is going to completely go away? No, we probably will see a reduction in size requirements. But where that balance comes is going to really be where they find that hybrid. And so I think it's not going to be immediate. I think it will take a bit of time for it to come through. But certainly for a number of years, we've been seeing people looking for small offices anyway. So that's likely to be pushed through even more now.
Yeah,
is that a trend?
Sorry.
Harry.
No, just to add to that point, actually, I think, small offices work for a number of reasons. For new businesses starting up, and as we've seen in recessions in the past, a lot of the time a recession can be a good time for new businesses to set up, and they will obviously generally prefer a smaller space. But then there's also current occupiers who are looking to rationalise the space they have at the moment and maybe reduce the footprint. So we've always seen that the smaller offices are very popular, but we think they'll probably be more popular. But just a last point on offices, my view is that people do want a division between where they work and where they live, and that's why I'm quite bullish on the office sector. I think it will continue to be it will be a big part in the real estate climate.
We've got one final question. Residential and commercial projects that are upcoming and being developed at the moment, do you think there'll be a correction in the prices with the downward trend, or do you think that prices will remain static and continue at the point they're at?
Hash, do you want to take that?
My gut instinct is